Listen up, investors. The first quarter of 2025 was one for the history books, and not in a good way. The S&P 500, our bellwether for the U.S. stock market, just had its worst start in years. I'm talking about a serious slump, folks. Now, I know some of you are hoping for a miracle turnaround, a second quarter surge that'll erase those losses and get us back on track. But let me tell you something, don't hold your breath. The same storm clouds that battered the market in Q1, they haven't cleared. We're talking about a perfect storm of inflation, interest rate hikes, and geopolitical turmoil, all with the potential to send stocks spiraling even lower. But don't panic just yet. Let's talk turkey about inflation, folks. Prices are soaring, and the Federal Reserve, our main line of defense against inflation, is stuck between a rock and a hard place. They want to tame inflation without crushing the economy, but it's like walking a tightrope during an earthquake. They initially hinted at rate cuts this year, but with inflation hotter than a firecracker, those cuts are off the table. Higher interest rates mean borrowing costs more for businesses and consumers. As long as inflation is red hot, the stock market is going to feel the heat. All this talk of inflation and interest rates has sparked a new fear recession. Some experts are saying a soft landing is still possible, but I'm here to tell you, that's wishful thinking. We've got a whole bunch of warning lights flashing: red-high interest rates, consumer spending hitting the skids, and corporate earnings going south. Companies are already feeling the pinch, and they're battening down the hatches. This isn't just doom and gloom, folks. It's the economic reality we're facing. If inflation and recession weren't enough to worry about, let's throw some geopolitical turmoil into the mix. The world is starting to look like a powder keg, and that's bad news for the markets. We've got conflicts erupting, trade wars brewing, and supply chains tangled up like a plate of spaghetti. Take the United States and China, for example. They're locked in a tech and trade standoff that's making life difficult for multinational companies. And don't even get me started on the instability in the Middle East and Eastern Europe. It's driving up energy prices, and that means higher costs for businesses and consumers alike. This isn't just a passing storm, folks. It's a seismic shift in the global landscape, and it's going to have lasting consequences for the markets. Let's talk tech, baby. The tech sector has been the darling of Wall Street for years, but even this golden goose might be cooked. Valuations for some of these tech giants are through the roof. We're talking nosebleed levels that defy gravity and common sense. Now, I'm not saying all tech is bad, but when companies are valued more on hype than on actual performance, that's a recipe for disaster. And let's not forget about the AI craze. Everyone's jumping on the AI bandwagon, driving up stock prices based on promises, not profits. We could see a tech wreck of epic proportions, dragging the entire market down with it. Here's the thing about low interest rates, they're like a sugar rush. They make everything seem great in the moment, but the crash is coming. Companies gorged themselves on cheap debt when rates were low, but now that the party's over, the hangover is setting in. With interest rates rising, those debt payments are getting heavier by the day. We're already seeing companies struggle to make their debt payments, and if a few big players go belly up, it could trigger a domino effect that ripples through the entire financial system. Corporate debt could be the ticking time bomb that sets off the next crisis. So, there you have it, folks. The bottom line is this. The market is facing a perfect storm of risks right now. Inflation is raging, recession fears are mounting, geopolitical tensions are simmering, the tech sector is looking bubbly, and corporate debt is a ticking time bomb. But don't despair, this isn't the time to bury your money in the backyard. It's the time to be smart, be strategic, and be prepared. Stay diversified. Don't put all your eggs in one basket. Spread your investments across different sectors and asset classes to cushion the blow if one area takes a hit. Keep your eyes glued to the Federal Reserve. Their interest rate decisions will make or break the market. Remember, folks, the road ahead might be bumpy, but with the right mindset and a little bit of preparation, we can weather this storm and come out stronger on the other side. Want more in-depth stock market analysis? Subscribe to our YouTube channel for real-time updates, expert insights, and the latest trends shaping the markets.